Hi guys. Today we will analyze Costco stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. In the last year, Costco was a good performer, but there are some doubts in the very recent evolution. The long-term trend is neutral and the short-term trend is neutral. Support level is around $492. The next support level is around $469. Resistance level is around $567. In the last month the stock has been trading between $469 and $540 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.7 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 11% per year, for last 5 years. We see that the average profit margin of the stock has been around 2% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 114% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Costco company: bad, average, and good. First scenario. Costco will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 6%. Future profit margin would be low, 1%. Future free cash flow to net income rate would be low, 90%. In this case, the fair value of the stock today would be $154. The second scenario. Costco will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 7%. Future profit margin would be average, 1.5%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $235. The third scenario. Costco will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 2%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $330. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 11.63. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Costco, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 30. Again, I will use 3 different scenarios for Costco company: bad, average, and good. First scenario. Costco will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 6%. Future P/E would be low, 22. In this case, the fair value of the stock today would be $156. Second scenario. Costco will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 7%. Future P/E would be average, 26. In this case, the fair value of the stock today would be $200. Third scenario. Costco will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 30. In this case, the fair value of the stock today would be $252. As you can see, today the stock is overvalued, $518, even if we expect the company's high performance in future. The revenue will grow by 8% on average per year in the next 5 years. While showing a small growth rate, the stock is too expensive at the moment. 90% of the companies listed in the same industry have more reasonable price. I may consider buying the stock if it drops below $250, the stock's pre-pandemic level. Company's strengths. Costco operates 828 stores for paying members in 12 countries. The company has recurring revenue from membership fees, 2% of its 2021 revenue, with renewal rates of almost 92% in the US and Canada. Costco estimates that its in-stock position is better than anybody out there. In 2021, the company sold more than $59 billion of merchandise under its own Kirkland Signature brand, with growth of 13% from 2020. That is more than revenue at Coca-Cola, more than 3 times as much as Colgate-Palmolive, and even more than Kraft Heinz, Kellogg, and Campbell Soup combined. Costco sells a curated selection of items that enables it to both save money for customers and make a reasonable profit. Full ownership of 644 sites and warehouses, and financial strength that supports double-digit dividend growth, special dividends and buybacks. Costco has a return on assets of 8% and return on equity of 28%. This is amongst the best returns in the industry. Risks. In addition to a growing presence from Amazon, Walmart is making improvements and offering a membership program for delivery. Costco's membership renewals could come under pressure as Amazon provides more services to Prime members. Traditional grocery stores are getting smarter and offering discount sizes of key products to keep core shoppers from needing a big box membership. The millennial generation has grown up ordering online, and while they are living in apartments or small homes, they might not have as much demand for the big sizes that Costco offers. The company could experience lower gross margins during periods of gasoline price increases. As the company expands internationally, its earnings could become slightly more volatile as a result of currency fluctuations. The company will show a small growth in revenue. The revenue will grow by 8% on average per year. The EPS growth is decreasing. In the next 5 years the growth will be less than in the last years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.